Welcome aboard the Bitcoin Express. My name is Chase. Let's get to it. Ethereum is on fire. It has been the second leading cryptocurrency for many years, and it still is until this day because of the value that it brings to the table. But what I'm going to tell you about Ethereum today is something that I think very few people understand, and it has to do with the asset class that Ethereum will belong to once it transitions to Ethereum 2.0, Ethereum with proof of stake. And this is all based upon the transition happening successfully. Let me explain. There are three major asset classes. Those are capital assets, consumable, transformable assets, or store of value assets. Typically, when we think of asset classes, we think things such as stocks, gold, bonds, fine art, currency, but all of these things fall under these three major umbrella categories. So with capital assets, it is something that produces a regular cash flow, something such as stocks of a company that brings in a profit, bonds, or real estate. When you buy real estate and you rent it out to tenants, every month you will be getting cash flow, you will be making money. Then we have consumable / transformable assets. These are things such as commodities, such as grains, oil, coffee, or gas, or it could also be precious metals. We can use these precious metals for other purposes. We can transform them. We can take gold and silver. We can use it for jewelry. We can use it for electronics. We can use it for dental fillings. And then we have the third umbrella category. These are store of value assets, and these assets cannot be consumed, but they hold their value over time. And in this case, real estate can be a store of value as well. If someone owns real estate and they are not renting it out, they're just buying it, they own it, they can wait a few years and it might increase in value. Same thing with fine art. You buy art and you wait for the future to see if someone will pay you a higher price for it. So as you can see, a lot of assets belong to one category, but with things such as real estate or gold, they can be in two categories. Again, real estate can be an income producing asset if you're renting it out and collecting those payments every month, or it could just be a store of value that you buy, you hold, and in the future, someone pays you more money for it. Same thing with gold. It can be used for jewelry, for electronics, or silver as well, or other precious metals, or you can just hold on to them and wait for someone to pay you a higher price in the future. So when it comes to Ethereum today, what asset class is it part of? Well, as a store of value, it's pretty debatable because even though every year the yearly low for Ethereum is higher and higher, the price of Ethereum is just so volatile that many people would have a hard time classifying it as a store of value. But at the moment, we can say that it is a consumable asset because we need Ethereum for the network to run. We need to pay Ethereum gas fees every time we run a smart contract or we send Ethereum or we make an execution on the blockchain. We need Ethereum, so it is a consumable asset. And with Bitcoin as well, debatable. Is it a store of value? I do believe that it is a store of value because every year its yearly low is higher and higher. And compared to all the other cryptocurrencies, such as Ethereum, which also has the same chart of a higher yearly low, Bitcoin has been more stable relative to all of those other cryptocurrencies. But what I wanted to tell you in this video today is that when Ethereum makes this transition to Ethereum 2.0, proof of stake, it has the potential to become the first asset that I know of that belongs to all three of these major asset classes: capital assets, consumable assets, and store of value assets. And this is how it works. Let's first go over capital assets. If you remember, I told you it's something that has cash flow. It brings in money maybe every week or every month. So at the moment, this is not the case for Ethereum. To get more Ethereum, you need to use outside resources. You need to use electricity. You need to use computer hardware. And then you can mine more Bitcoin, or you can also collect fees. But with the transition to proof of stake, you will now be using the Ethereum itself to run the blockchain. So right now in the present proof of work, you use electricity and computer hardware to be part of the blockchain. But in the future with proof of stake, you will use the Ethereum itself, the asset itself, to participate in the blockchain. And by doing this, you will receive rewards in newly minted Ethereum or transaction fees. So as you can see here, the asset itself, Ethereum, is producing more of the same asset. So it is now a capital asset, a income producing asset. And in the beginning, with staking, the rewards can vary. The less Ethereum that is staked on the Ethereum blockchain will result in higher annual rewards. Rewards as high as 18% annual yield. But over time, as more people enter into Ethereum's proof of stake, those rewards can go lower, even as low as 1.5 or 2%. In the beginning, if you were thinking about staking Ethereum, if it transitions successfully to proof of stake, you will need 32 Ethereum to stake or to run a node. But luckily, if you have less than 32, maybe you only have 5 Ethereum or 2 Ethereum, you likely will still be able to stake through a staking pool. These are services ran by third parties. I know this company over here, Staked, very popular for staking cryptocurrency on other people's behalf, they will be staking Ethereum for their customers. And it's very likely that exchanges will do this as well, such as Coinbase, Binance, and Kraken. So when the time comes and you want to participate in proof of stake, you likely will be able to do it with under 32 Ethereum by joining a pool. So this is what makes Ethereum in the transition a capital asset. Now, number 2, Ethereum will continue to be a consumable asset. Because on Ethereum, for it to run, you need to use Ethereum. You need to pay gas payments so that everything on the blockchain can actually execute. Every single time an asset is moved, it's sent, a loan is generated, an exchange is made, a purchase is executed, a smart contract is executed, you need Ethereum. You need to pay gas fees so that it works. So this is something that Ethereum already does today with proof of work, but it will continue to do this with the transition to proof of stake, especially with more projects. We see more projects are building on Ethereum, more useful applications are building on Ethereum. So with time, as more people are building on Ethereum, there will be a need, even more than there is today, for Ethereum to be used as gas to run the network. And the last thing that I wanted to speak about in terms of the asset class is that Ethereum now will be a store of value. A store of value is something that is typically scarce, and over time it holds its value or it gains its value. So with proof of stake, to participate in the Ethereum blockchain, a person will need to lock up their Ethereum. And as they lock it up, it makes Ethereum more scarce. And as there is less people trading, buying or selling Ethereum, the value is likely to increase. And then on top of that, for this whole ecosystem of DeFi and decentralized applications to work, you need to have value backing it. And when it comes to DeFi, at the moment at least, Ethereum is the backbone. It is the store of value. Without Ethereum at the base of this whole ecosystem, as you can see on this chart here, Ethereum is the base. Everything is built on top of it. Without this store of value, the whole system collapses. So even today, with proof of work, Ethereum is already acting as a store of value. But in the future, with proof of stake, this will even be exaggerated, as Ethereum will have to be locked up on the Ethereum blockchain for this whole system to work. So this all sounds very exciting, but of course there is a major risk. The major risk is that this transition does not happen successfully. Right now, in 2020, July of 2020, we're still using proof of work for Ethereum. And the transition to proof of stake, Ethereum 2.0, it will not happen overnight. It will be in phases, many phases. We will go through different test nets and it will take time, probably years until it's fully completed. And of course, along the way, there can be an issue and it might not transition successfully. But if Ethereum does go through all of these phases and it does transition successfully and projects continue to build on top of Ethereum, The potential for Ethereum is almost unlimited. So I wanted to share that thought with you today. Again, nothing is guaranteed, especially in crypto. For all we know, this whole transition might not happen as expected. But if it does, I believe there is tremendous potential for Ethereum.